What's up, YouTubers? Ken here from the Dyslexic Investor, and we're going to be looking at some things on how to gauge the current market trends and how that the first signs of things that are slightly turning and how different correlations between stocks and equities and bonds and the yen and how the inverses of those sometimes could be a tell. Again, not just one thing tells anything, it's a multiple check boxes that have to be lined up for able to be, it could be a direction change. Alright, so let's go dive in. What do I do first? I always look at a daily chart. In the US equities, always use SPY or SPX. This is basically the S&P 500 and all the 500 companies within the United States, and then all the different categories within that. So I look at that, okay, on this chart, again, a daily chart, each of these candles is 1 day. So you see here, we just reached a high just yesterday. And we've been pushing higher almost every single day. We did close lower. We didn't break any moving averages here. And none of the moving averages have crossed over anything. So you see that they're nicely stacked, almost like parallel to each other. Which is that's a good sign. That is a tenuous uptrend. It's once the lower, the 5 starts crossing into the 8 crossing into 21, and the 21 starts curving down, is a break in trend, aka right here. You saw here that we did hit the yellow line that we use here at the Dyslexic Investor is the 21 EMA, which is the, I'm doing air quotes, reversion to the mean. So that hit there. That if it was a continuous uptrend, you would have bought that, but you would have been flushed out once it checked and closed below it. So it would have been a very short pop, literally a day trade or a swing trade for 1 day. Then that being said, you can start seeing here that things kind of start crossing. It didn't actually cross here, but it did cross here on strength, but it did close above the 21. So that could have been a sign of other things to come that could have been negative potential. Okay, let's just go back to what we have current day. We haven't seen any crisscrosses of anything. We haven't seen multiple red days like we did here or here. My prediction was here that we're going to actually touch the yellow line. We actually got pretty close to it within a point or two of touching it, and then bouncing higher for all-time highs, which you saw here. Another way I look at is also the QQQ. So QQQs is all the NASDAQ stocks, and that's usually a little more tech-heavy, and it basically will almost mimic the same kind of pattern as the S&P 500 and so forth. Then the one I wanted to point out is these are all ETFs, so by the way. IWM, which is the Russell 2000, which is like 2,000 of the smaller cap stocks, which is usually an indicator of how our economy is doing within the United States. Because most of the businesses within the Russell they're not multifaceted companies that are global reaching. They might do business globally, but they don't have multiple headquarters throughout the thing. And we're having a crazy thunderstorm here in Northern Virginia here. Wow, did you guys hear all that? So just to keep an eye on it. So this is the IWM, okay? Then we can go back to SPY here. You saw here, so this is hit its low on 6/3, and it made a high just 2 days ago. So IWM here's at 6/3. It actually hit its low before, maybe a little before the SPY. So we can go back here again, hit back. And it was actually, that was 6. Yeah. So this is the IWM or the Russell actually indicated the bottom first prior to the S&P 500. So where I'm getting with this is that the IWM is kind of the lagger or the leader in a lot of aspects of how the markets trade. And you see here, it should have hit an all-time high yesterday, but guess what? It hasn't. And I'm not trying to be a negative bull here. I'm just seeing some signs here that things in the short term might get a little pinchy here. You see here that the white, which is the 5, was almost crossing the blue. We did bounce and closed above the 21, which is an okay sign. But again, we have 2 down days. We need a nice little pop tomorrow off this. It needs to rebound substantially to continue going higher. Another correlation between equities and bonds is the TLT. So TLT is long-term bonds. And you can see here that this was my support the other day. I did this a couple days ago, and it broke through it substantially. So it broke through it substantially, and it closed below the 21. Things are crossing and going lower. So in hindsight, normally bonds and equity are on the opposite ends. So if bonds go lower, equity should go higher. Vice versa, with bonds going higher, that equity should go higher. Equity should go lower. We do see the 5 already crossing the 21, and if once that blue crosses the 21, that could be a substantial correction on the TLT here, which is I wouldn't say worrisome, but it's definitely eye-opening, thinking due to the fact of the Fed Chairman Powell not really coming out and saying we're going to cut rates or this and that. Let's go back here to TLT again. There we go. All right, I like this chart. And it broke. This is a substantial downtick. This is a huge red candle. Like, we've seen it a couple times here, about a bounce above the 21. We saw it a couple times here, and so forth. So the TLT inversion of SPY. We go to SPY here. You can kind of see here that it's showing nice upticks. All the things are nicely covered. So this is the 8. This is the yellow line here. It is the 21. So we've got a nice push up here. Like, this could potentially even go higher than this. And I have it on. Where did I have that at? Was that on the futures market? I think I had it on the futures market. Yeah. So that would potentially can go up to 30.25 or even higher to like 30.50 would be a nice little round number for a nice little pullback to have this kind of slow down. Like, not really, again, the China news, we're having the China news and so forth. And another correlation that I like to look at between the US and so forth is the, where is it? The yen. So the correlation too is if the yen goes higher, nope, that is not the yen. What did I click on? That's the bonds. See, these downtick. The TLT basically, here it is. There it is. The Japanese yen futures. And it hasn't, the yen has been going down slightly, but it bounced the last 2 days. So it bounced when we hit the all-time high yesterday. So let's go to a more simplistic chart, like the daily here. We're going to get rid of these lines here. All right. Don't matter on the numbers, honestly, just look at the chart pattern, because the yen, this is yen futures contracts. So just looking on the charting parameters here, we've seen it basically hit a high of 625. And remember, we hit that low at like the beginning of May, so it would have been right about here. So the day that we hit so substantially low, the yen made a huge jump. Again, making that correlation. If our market equities go down, they go up. This is the opposite ends. Of course, how a lot of hedge funds work is they bet against one and they put their money on others. It's like a swap. So a parity trade. So the high, again, 625. So let's go back here. So SPY. We're going to go to 625. But guess what? that was one of the lowest days in the last week or so. And that, on the yen here, was the highest point of the day. So, what can this tell us of the future? Again, no one has a crystal ball. I hope everyone knows that. And when trading and investing, you just don't know the future. You just want to put your money with the highest probability of success. And with these tells of the TLT going down, with the yens slightly closing below the 21, which can potentially push lower, indicating that we could be getting higher equities in the short term, because this has closed before below the 21, like right here, and it has made a massive comeback. It has closed below the 21 here and kind of drizzled lower. It's closed below the 21 here, kind of made a little bit of pop up, and then just fizzled all the way down. So looking at all these different aspects, I'm continuously, again, bullish on the indexes here into a certain level. I don't want to be Mr. Greedy Moneybags here, but when it starts reaching above these all-time highs and it's quite far away from the overall yellow line, that makes me a little uncomfortable, and that makes me want to maybe like take some money off the table. Again, trade wisely. These are just what I'm doing. These are just my ideas, and if you feel freely, just talk to your financial advisor. Again, thank you guys for watching. This is Ken from the Dyslexic Investor. Catch you guys on the flip side. Peace.